traders. Gary Wagner here, just about 11:10 in Honolulu, 5:10 in New York. It is Tuesday, 15th of September, 2015. This is Trending Markets. Interesting scenario brewing in the U.S. equities markets as we have the Dow Jones Industrial Average up in triple digits, up about 228 points, just shy of 16,600. More importantly, in terms of the technical view on the market, we've been talking about this over the last couple of days, we see a very, very strong pattern emerging and the potential for a real nice breakout. And we have been looking for a potential breakout to the upside. Reason being is we have an ascending trend line on the bottom with a series of higher lows. However, we do have what we typically call a flat top in the market, in which we have a series of highs that are fairly identical in the market, ranging around this area, about 1660 to above. My sense is that as we approach the apex of this pattern group, we should have a release of energy. I believe it will be a sizable release, and I'm looking for the potential of seeing the market go and move to the upside. However, what we are also looking at, because this is a technical view of the market, is the fact that the FOMC meeting is scheduled to begin tomorrow, conclude on Thursday. And depending on what statements are said on Thursday, we could really see this market take off one way or another. My sense is that if, in fact, we have the Fed holding off in any kind of announcement of a imminent interest rate hike, meaning a hike that would begin this month or next, we could see this market really take off and move to the upside, which takes us to our current studies in the S&P 500. This, of course, is a mini S&P contract, and that's a contract we'll be looking to trade. I've brought up a daily chart, and on this daily chart, I have a couple of different studies. Now, the first study that we are looking at on the bottom, of course, is an MACD, Moving Average Convergence and Divergence. It accounts for this tremendous slide down. You can see that right in here, how that momentum really moved to the downside, but you can see a genuine shift here to the upside. You can see the crossing of these moving average lines. And then secondly, we have what is cascading channel lines in essence, and we've had a downside bias. That's obvious. So really a break above this resistance line right here would truly signal a nice breakout to the upside. Now, the other way to look at it, of course, is to simply put in the lines that we had in the Dow Jones Industrial Average, meaning that we have this ascending bottom support level and our top level, meaning our flat on the top, and that would also signal a genuine breakout to the upside and a move to higher pricing. Now, most importantly, assuming that we do get the breakout, we're still looking at a daily chart, but I do have some Elliott wave calculations in here. And under our current count in Elliott wave, we are looking at the market, which has been coming down, so it is a bear count. 1, 2, long wave 3 down. We believe that we are in a counter wave 4, and that wave 4 should take us approximately, call it to about 2030. So there's considerable room on the upside in terms of profit potential. And in terms of stops are really going to be your tricky point because you have such tremendous volatility within the S&P. But that is the current trade that I'm looking to put on either later today or tomorrow. Now, we do have one trade that is currently on. That is in crude light, and crude light is up today. It is up 2.5% at 45.11. Of course, we're in roughly at 45.37, 45.25 in that area. Our stop is above 46.50. My recommendation is to maintain our current position and to maintain our stops. When we look at this market from, for example, a daily chart, let's go ahead and pull that up. We can see almost the exact opposite of what we've been looking at in the S&Ps, and that is here we have a descending top and we have a flat bottom. And so in this one, we are coming closer and closer to the apex. My sense is we'll get a break to the downside in crude oil. We'll have to see how all of this kind of unfolds over the next few days. We'll look to add the Standard & Poor's position on. I am looking at it in terms of putting a long on, meaning going, betting that the market is going to move higher. I still believe we'll see oil move lower. This has been Gary Wagner for Trending Markets. We'll talk to you tomorrow for another daily update and review. Bye-bye.